let's talk about one of our open positions, and that's gold. So we're looking for some patterns, and then but on a week or monthly time frame right now, we can see that we have an impulse that was testing a structural support area or resistant area. So we got a clean break with a support that was tested and broke above here, and that's just a good confirmation for actually getting in. Even without being exactly precise, we can see that we have this impulse with the correction pull back to the 38% threshold, which gives us a target of this range on a monthly time frame, and you can see that we are closing above this previous structural resistance zone. You can see on the daily time frame that we actually already tested this previous structural support area or resistant area as support, with a nice reversal candle forming here as well. So basically we have this 38% fib of the weekly of the monthly leg plus weekly resistance, daily respecting as support. So this is what we're looking after. This is a 7.16 risk to reward ratio. So it's really good risk to reward on this one, and that's why we're in on this trade. So that's what it closed, and that's what we're expecting to occur this week based on this candle formation on the daily time frame, respecting this resistance area plus the impulsive pattern on the monthly time frame as well. So that's why we're in on gold. Now let's go to the next one, and we're gonna go to euro pound real quick, and then we're gonna see what we're looking at here. So once again, we want to take a top-down view of the market. So we're going to go to a higher time frame, see if we recognize any patterns here. I can't really see much going on, but we do, I mean, this is just rough, have a roughly descending trend line occurring, and we have a support candle breaking above that with a nice rejection candle forming previously. So remember, monthly still hasn't closed yet, but we can see on the weekly time frame that we did test it, in fact, and we are still above, trading above that area. So possibility for us to go into a correction, and if we go into a line chart, we can see potential areas where we would probably want to go and test again. Technically, this area as well would be considered a resistance zone, but I feel like this is less significant than this. But let's take a Fibonacci retracement tool, and we can see what is in confluence with the fibs. Now the fibs doesn't necessarily mean it's 100% accurate. It's just the more confluence there is with structure and the Fibonacci level is, the higher probability is that it's going to be a point of reversal. Let's do 50% fib plus weekly structure. So descending trend line, broke above, tested a weekly, and that was on the monthly, by the way. And then structure with a fib retracement here. And then we'll see what price does here. If we start making higher highs and higher lows in this region, we can consider going in for a long. And the long would be, so it's a 2-to-1 risk to reward ratio. Not ideal, it's a little bit riskier, so we're gonna see how the market opens and how our current positions are placed before we decide to go into this. So it's a good risk to reward for most people, but we like to stay and adhere to a 3+. So we'll see what structure does. Maybe it has a break sooner for the upside. Let's say something like this, with a strong confirmation that it's going to go up. Then we would trade this correction. Otherwise, and that would give us a 3.5-to-1. Otherwise, we want to wait for structure to be safe, and then that would give us a less ideal risk to reward ratio. But that's just to be safe. So basically this is what we're looking at. Now those are two areas of resistance, is one and then the second one. Now if it's breaking above here, it has a higher probability of coming up just to retest this zone. And then also when it's here, we can look at possible shorts. So and once again, we're going to be using 4 hours for confirmation. So maybe 4-hour structure based on our strategy is a little bit better. So that is what we're looking at here. That is a 2.7-to-1 risk to reward ratio So we have this descending trend line, monthly time frame. We have, if we take a Fibonacci of this leg, we have the 58% threshold aligning much better with more structure. However, the 38% threshold is also showing a lot of potential resistance area as well. So we have to look out for that if we do end up going long on this. This one is a little bit of a riskier trade. So we're going to see how the market opens and how our current positions are placed before we actually decide if we want to continue in with this. However, if structure starts making pushes to higher highs and giving compelling evidence to go in, we can bring our risk down significantly, our entry point down, which would bring our risk to reward up dramatically, as you can see here. So that's this trade. Now let's go to Euro Swiss franc. So once again, I like to just go on a monthly time frame, get a high level overview of what structure is looking like. I just like to do this and mess around, see if there's anything interesting that's occurring, and then we bring it back to this, and then it's like a process of elimination, what is less significant. So we got that pattern on a weekly time frame, nothing on monthly, structure and pattern on weekly time frame. Go down to a daily real quick. I'm going to delete this one because it's not relevant anymore. So let's go check that out once more. So we can see we have this nice harmonics butterfly pattern forming, and it's completing with a rejecting candle on the weekly time frame above that support area. And we can see structure on the daily time frame is also in confluence with that weekly support zone. So the candle closed just above it. And so we're currently in on this. We can see that we got really close to hitting our stop loss. That is insane. But we persevered, we endured that, and then we broke above the support area. So that's where we're at right now. And let's just mark this up real quick. So this is weekly support. And the reason why I'm picking these Fibonacci levels is one, kind of arbitrary on this last target, because we want to see what this is actually going to do. This aligns better with structure. We also have the 38% threshold to worry about, so we have to see how price is behaving in this area on the 4-hour and daily. Because if it starts showing reversal signs, then we might as well just cash out here and then come in on another entry if valid. So that's where we're at with Euro Swiss franc. Currently in on this trade, we're just waiting and monitoring. So we got one more trade to cover. So this was our setup from the past, and this is what our trade was in. This is where we entered. About right here. So less significant, more significant. So maybe we can have our, since this is an area of resistance, we can actually monitor price and see what it does here. If there's signs of a reversal coming into play, then we'll actually just cancel out right away. Otherwise, we're just gonna let it run its course and see what it does from here. So we got the weekly support, resistance, DP1 equals 38%, daily fib 2, except this is the 68% threshold. So that's a 4-to-1 risk to reward ratio. Even at the 38% threshold, if we take out, that's a 1 to 2.77 risk reward ratio. So great risk even at the first take profit. However, I think that we have a stronger inclination to test the TP2 zone before we actually were to go upward, if we were at all. Hopefully this was informative for you guys and helpful. Thanks again, guys. See you guys in the next video, where we're going to be doing a recap of last week, which is Sunday the 5th through Friday the 10th of January. Thanks again. Talk to you guys in the next video. Bye.
What's up, guys? I want to say thank you again for checking out this breakdown for this particular pair. And I want to ask you guys to not only like and comment on this video, but also go check out our MAM channel. We have a channel dedicated specifically for breakdowns of the pairs and positions that we're actually entering or were already entered. So if you are interested in just getting a little bit more supplementary information and understanding how we analyze the market, go check out that MAM channel. It will be somewhere in the description or in the bio above. So thank you again, guys. I appreciate it. Go check out the MAM channel, like and comment, and don't forget to follow us for more of these free analysis videos. Thank you again. Talk to you soon.